Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and joining me as he does most every week, there's some weeks he doesn't, but most every weeks, is Green Zone Fortunes co-editor Charles Sizemore, and we're back with Investing with Charles. Charles, we're going to talk about two topics that are kind of related in a way, but we're going to try to relate the two, and that is inflation and dividends. But before I get into that, I do want to make sure that everyone heads over to moneyandmarkets.com and make sure you play around with that stock power rating system. And you can go to our homepage at moneymarkets.com. In the top right-hand corner, you'll see a search bar. Just type in any ticker or company name, and you'll be able to see our ratings, our proprietary ratings. We use six, I'll hold up six fingers out of a pin in my hand, 6 different factors, 3 fundamental and 3 technical factors that we use to make up the overall rating. You'll be able to see that. You'll see stock charts, fundamental data that's company related, and any research that we have on any of these companies, and it's all at your fingertips for free at moneyandmarkets.com. If you have a question for Adam, Charles, myself, if you want us to answer in any of our upcoming videos, we would love to do that. Just send us an email at feedback@moneyandmarkets.com. We'll drop that right down below, feedback@moneyandmarkets.com. And if you send us a question and we use it in any of our upcoming videos, we're going to send you some very cool Money and Markets gear. We've got hats, sweatshirts, t-shirts, although sweatshirts, maybe not so much now, especially if you're living in the southern part of the U.S. Where we are just boiling here. But we do have them available, as well as t-shirts and hats, and you can get one if you send us a question and we use it in an upcoming video. Now, Charles, inflation is just one of those things that we hear about in the financial news and in the mainstream media, all the time of late. 9.1% as of last month on an annual basis. We're not going to get too much into that. The question I have for you today revolves around dividends. And, I'm just wondering, is there a way to use investments in dividend stocks to help kind of upend the rise in inflation?
Absolutely.
Okay.
That's the answer.
To expand.
No. So the more detailed answer is, okay, what is inflation? Inflation is a rising in prices, a rising in your expenses. So when your expenses are rising, you need your income to rise as well, or you're falling behind. And when you're dealing with a fixed income stream, whether it be from a pension, whether it be from bonds, I would say Social Security. Social Security isn't technically fixed. It does rise with the cost of living adjustment, but that cost of living adjustment does oftentimes kind of lag in real inflation. So, when your income stream doesn't really move, let's just say you're in a job and you haven't gotten a raise in 5 years. Like when your income is not moving, but your expenses are, you are getting poorer. So dividends can really help you there if you focus on companies that raise their dividends, have a good history of raising them. I'll give one good example here. Microsoft is not really a company you would normally think of as a dividend stock. Yes, they pay a dividend. They've paid dividends since the actually early mid 2000s, but they've never been it's never been a super high yielding company. That said, they have been dividend raising workhorses over the last, going on 20 years here. They have raised that dividend just like clockwork and by a good amount. Now, if you look at a chart of Microsoft's dividend increases over the last several years here, you can see, some years the hike is bigger than others, but it's about 10% a year. So year in, year out, they're raising that dividend about 10% a year. Some years a bit more, some years a bit less, but it's about 10%. Now, we got inflation at 9% right now. That's, you're not really getting far ahead of inflation on that. But I do believe that 9% inflation is not going to be with us forever. This is sort of a temporary blip. I think, kind of normal inflation is going to be a bit higher than what the Fed wants, which is 2%, probably the norm we should expect. The average we should expect for the next couple of years might be something like 4 or 5. I don't know. We'll see. But if you get a stock like Microsoft there in your portfolio, they should easily cover that over time. They should easily cover inflation and then some. Not a super high yielder, but the dividend growth is keeping you ahead of inflation.
Yeah, if you look at 2010, Microsoft paid an annual dividend. Now, this is annual. That Microsoft pays a quarterly dividend, but if you take all those dividends and multiply each quarter by if you multiply it by 4, because they are consistent each quarter. Now they raise it at you typically in the first quarter, and then they keep that consistent over the subsequent 3 quarters. So if you take that, they paid 52 cents a year per share in 2010. In 2022, with forward dividend yield and expectations, that dividend is expected to be about $2.48 per share per year. And they pay that out over a quarterly basis. So divide that by 4, and that's what you're looking at. So, Microsoft,
one more
right.
point on that, Matt. One more point would be that, Microsoft isn't a super high yielder today. It yields about 1%, actually a little bit less. But if you're looking at dividend growth like that, we touched on the concept of yield on cost a few weeks ago, and that's relevant here. Whatever you're starting, whatever you lock in, whatever price you lock in today, if they're raising that dividend by 10% plus a year, after a couple of years, you're looking at a pretty darn good yield on your original cost. So that is a really important concept to come back to here.
And if you do want to catch more on our discussion on yield on cost, you can go back on our YouTube channel and you can find where we discuss that. Now, Microsoft is not alone. There are a lot of dividend payers out there, and I know you've got a favorite. This is a company that I think love might be understating it a bit. And that is Realty Income. This is a REIT, a real estate investment trust, and this is a company that I mean, for all intents and ppurposes, you are madly in love with. Talk about that a little bit.
Yeah, my feelings for this stock are such that my wife gets jealous. I'm sort of joking. I love Realty Income. Realty Income,
kind of, but not really.
Yeah, she's I see you've been running around with that stock again, huh? Where were you last night? Running around with Realty Income again? Yeah. Anyway, that's it. Why do I like Realty Income? This is a stock that has been I use the word workhorse a lot, but it's just such a great word. This is a workhorse dividend stock if there ever was one. They don't. Not only do they raise their dividend every year, they actually raise it every quarter. They've raised their dividend every quarter for years, and they also pay the dividend monthly. Now, their dividend hikes annually are not keeping pace with today's inflation. Their dividend hikes over the company's life have been that 4 to 5% range. Now, that's not keeping pace with 9% inflation today, of course, but that's well ahead of the average inflation over that period. Inflation's averaged, 2-3%, maybe a little higher in some years, but they're well ahead of that. So if you have a year like 2022, okay, very few things are keeping pace with inflation this year. This is an anomalous year. It is what it is. But if you have a portfolio full of good stocks like Realty Income that have a good, consistent history, not just a history, but a priority, like this is what they do. They take pride in this. If you go to their website, it's just all over the site, how, we raise our dividend, for, this many consecutive years. I mean, like this, they really emphasize it. It's integral to their identity as a company. So if you have companies like these in your portfolio, you will keep ahead of inflation over time. Again, maybe not in 2022. 2022 is just one of those years, but over the course of your investing career, over the course of your retirement, yeah, you'll keep ahead of inflation by a pretty safe margin.
And just for reference, in 2010, as was shown in the chart, in 2010, the annual dividend for Realty Income, which is the ticker symbol O, $1.73 per share. In 2022, looking even ahead at forward expectations for the rest of the year, that dividend is going to be just under $3 at $2.97. So impressive dividend. I mean, it's and I think to come back around to it all and put a fine point on it is that yes, you can beat inflation, especially under normal circumstances. We're clearly not in a normal circumstance right now with inflation at 9.1%, but under normal circumstances when inflation is at 3 to 4%, especially if it's at the Fed's target of 2%, which is probably going to be a while before we reach that, then yes. And the key here is to find those stocks, those companies that pay out a dividend and not only pay it out, but increase it on a regular basis, whether it be annually, quarterly, or, in Realty Income, they pay it out monthly and they increase it quarterly. So you want to find those that are steadily increasing their dividends over the course of a good period of time, say a decade or 15 years or 20 years, and look for that. And then you'll be able to see a stock that, is consistent regardless of market conditions, because you've got a wide base here. And, they're going to, you can probably put about 90% on the fact they're going to raise them again and they're going to keep raising those over subsequent quarters.
Well, to that point, if anything would have given a company sort of carte blanche to cut or suspend their dividend, it would have been the pandemic. And a lot of companies did. Realty Income even raised their dividend during the pandemic. And this was a time when a lot of their tenants were actually suffering and having a hard time paying the rent. They still made it a priority to raise their dividend, at least modestly. So that shows major commitment to their shareholders. And that is actually, apart from just keeping ahead of inflation, it's the kind of company you're getting here. You're getting a company that values the shareholders, and this is how they show it. This is how they tell their shareholders, we value you, we want to take care of you. Here's that raised dividend.
Microsoft did even better. They were at $1.84 in 2019, rose it to $2.04 in 2020. Realty Income $273 in 2019, $281 in 2020 on a yearly basis. So both these companies did very well, and there's more of them out there. And that leads me to my next point that if you're really looking for solid, sound dividend investment and just investment information period, and that one stock every month that's going to crush the market, I want to encourage you to check out Green Zone Fortunes. This is where Adam O'Dell, our chief investment strategist, Charles, myself, and our entire team work diligently to really provide you in-depth research and that one stock every month that's going to break the market by at least 3 times over the next 12 months. Want to check that out? We'll put a link up top here so you can find out more about Green Zone Fortunes. He is Charles Sizemore. He is the co-editor of Green Zone Fortunes. I am Matt Clark. I'm the research analyst for Money and Markets. We have been a pleasure talking with you all this week. I certainly hope you come back and check out moneyandmarkets.com for safe, sound, smart, simple, adaptive investment information to give you profits in your portfolio in any market condition, bull, bear, neutral, no matter what. This is what we work for, is to make sure we find you those profitable opportunities no matter what the rest of the market is doing. I'm Matt Clark, research analyst for Money Markets. Till next time, everyone, safe trading.